Ladies and gentlemen, good day and welcome to Vidhi Specialty Food Ingredients Limited Q4 FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, Mr. Patel.
Thank you, Michelle. On behalf of Orient Capital, I welcome you all to Vidhi Specialty Food Ingredients Limited Q4 and FY 2024 earnings Concall. From management side, we have Mr. Bipin Manik, Chairman and Managing Director, Mr. Mihir Manik, Joint Managing Director, Mr. Mitesh Manik, Chief Financial Officer. I hope everybody had an opportunity to go through our investor deck that we have uploaded on exchanges and the company's website. A short disclaimer, I would like to say before we begin the call, this call may contain some of the forward-looking statements which are completely based upon our belief, opinion and expectations as of today. The statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mihir Manik. Over to you, sir.
Thank you, Parth. Good afternoon, everyone. I extend a warm welcome to all of you on our earnings conference call. First and foremost, I want to express my gratitude to each one of you for joining this call and for your continued support throughout our journey. Additionally, I extend a hearty welcome to those who are exploring our company for the first time. For the benefit of those who are new to our company, I would like to give a short background of company. Vidhi Specialty Food Ingredients was established in 1994. Formerly, it was known as Vidhi Dyestuffs Manufacturing Limited and is a leading manufacturer of superior synthetic food grade colors. The company supplies colors to diverse consumer industries such as food and feed, confectioneries and bakery, pet foods, pharmaceuticals, beverages, personal care products, cosmetics, home care products, etc. Food colors form a critical component of any product's appearance and appeal. With solid growth expected in the B2C user industries, growth prospects are favorable for the company owing to the company's strong product and service delivery. Our colors are being distributed and consumed in over 80 countries across 5 continents, meeting all the specific regulatory requirements for each region. The global food color market is estimated to grow at a CAGR of 4.7% from 2021 to 2026. The global food color market is estimated currently at 50,000 tons, with the domestic market estimated to be around 3,000 to 4,000 tons. Vidhi, being a synthetic food color manufacturer, envisages healthy demand for its products. And as the natural food colors market is fragmented and unorganized worldwide and faces many challenges on the fronts of stability, availability, adaptability sides, so the company has a fully equipped and functional laboratory accredited by the Bureau of Indian Standards, which forms the core of quality control department, with dedicated R&D facility with a team of PhDs and qualified chemists, constantly working on process engineering of the existing processes and on development of new products to enhance the product portfolio and offerings. Our company has 2 state-of-the-art manufacturing facilities, one located in the Khattar village of Raigad district in Maharashtra and the recently commercialized greenfield expansion in Dahej of Gujarat. The Dahej plant began production on December 12, 2023, following a successful trial run that began on August 27 of 2023. With this addition, the company's overall capacity has doubled from 325 metric tons per month to 675 metric tons per month. The total investment for this was INR 70 crores, which was all funded through internal accruals. I'm referring to the Dahej SEZ plant. This greenfield expansion will enable Vidhi to address the growing demand supply gap and will result in increasing better realizations as the company forays into new high-margin products. Our manufacturing facilities have been audited from time to time by various regulators and found satisfactory by them. This includes the US FDA. Vidhi offers 14 colors in all, out of which 6 colors are approved by the US FDA to be used in the USA and in Canada. These stringent quality requirements act as a high entry barrier for competitors and also requires multiple years of customer approvals ranging from 4 to 5 years to a maximum of 10 years. We are consistent with our transformation strategy to increase the manufacturing activities and gradually exit low-margin trading business. This, coupled with better product mix and continuous improvement in operational efficiency, will help the company to achieve lucrative margins. The fall in revenue from existing trading business will be offset by the new capacity expansion undertaken by the company, which is expected to further improve the profitability margins. In FY 2022, the revenue contribution from the manufacturing segment stood at 47%, which is now increased to 90% in FY'24. The management is committed to add new value-added products in our newer facilities, which will improve our consolidated margins in the coming quarters. Vidhi enjoys favorable export market for its products because of the high quality standards that the company has maintained and established relations with its long-standing customers. Exports for the year stood at 82% as compared to 45% in FY'22. We continue to penetrate into newer geographies and add new customers across diversified end user industry and further improve our wallet share from our existing customers. With the new greenfield expansion, we focus to enhance product portfolio and improve operational efficiencies and operating leverage. The board strives for a bright future for the company with overall growth in turnover as well as profit through expansion of its production facility. Now I would like to hand over the call to Mr. Mitesh, who is our CFO, so he can discuss the financial highlights. Please take over, Mr. Mitesh.
Thank you, Mr. Mihir, for that. First of all, I would like to extend a very warm welcome to everyone present in this call. Allow me to discuss the Q4 FY'24 financial performance of the company. The consolidated revenues for the quarter stood at rupees 80.6 crores versus rupees 89.5 crores in Q4 FY'23, thus registering a degrowth of 9.9% on a year-on-year basis, but on account of the gradually exiting trading business. As far as margins are concerned, the EBITDA stood at rupees 16 crores as compared to rupees 12.2 crores, thus registered a growth of 31.2% year-on-year. Our EBITDA margins for Q4 FY'24 was 19.8% as compared to 13.6% in Q4 FY'23. The PAT also stood at rupees 10.5 crores versus rupees 8.8 crores, hence registering a growth of 19.3% year-on-year. And our PAT margin for the quarter was 13% as compared to 9.8% in Q4 FY'23. Moving to the year-end annual performance, the consolidated revenue for the year stood at rupees 303 crores versus rupees 404 crores in FY'23. The EBITDA in FY'24 stood at rupees 57 crores versus rupees 55.8 crores in FY'23. The EBITDA margin improved significantly in FY'24 from FY'23. The margins stood at 18.8% in FY'24 as compared to 13.8% in FY'23, thus improving by 500 basis points. The PAT stood at rupees 36.4 crores in FY'24 versus rupees 37.7 crores in FY'23, registering a degrowth of 3.3%, but only because of the higher depreciation cost arising out of the start of operations at the new Dahej facility. The company has also declared a final dividend of rupees 1 per share, that is 100% per equity share, having face value of rupees 1 each for the financial year 2023-24 as a final dividend. I would now like to open the floor for questions and answers session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask questions. The first question is from the line of Ranveer from Nuvama Wealth. Please go ahead.
Thank you for taking the question. So two questions from my side. On facility-wise, can you give us the capacity utilization by end of FY'24?
And what would be your other question?
Yeah, and another is that in this industry, because now the trading portion, we are reducing and manufacturing, we are increasing. So how we are placed in competitive as far as competition is concerned. So how we are placed in the market? Who are the other players in the same line of business? So if you could deliberate, so that will be helpful. And also, if you could give some the kind of margin profile we have seen improvement. So what kind of margin we can see in the next couple of years? So that if you could guide.
Right. To answer your first question, we expect a monthly production of about 250 tons coming out of our Dahej facility in the third quarter of FY'24-25. And we expect the plant to be running at full capacity by the end of financial year 24-25. Now, coming back to your question on the kind of competition that exists, currently, as far as synthetic food colors is concerned, there are only three players as far as the Indian manufacturing, is concerned. One of them is Roha Dychem. The other one is Nilicon Food Dyes and Chemicals, and the third one is Vidhi. These are the only three serious players as far as food colors are concerned. Other than these, there are two American-based companies. One of them is Sensient of USA, and the other one is Dystar of USA, which is a relatively smaller company to Vidhi, Roha, and Sensient. So the entire, synthetic food color industry revolves around these five players. And as far as Vidhi is concerned, as far as competitiveness is concerned, the way based out of India, and because of our low overhead structure and because of our, expertise in raw material procurement and marketing strategy, and, our ability to serve the customers as required and on time, Vidhi enjoys a considerable advantage, worldwide, because our quality, our product, and, is extremely famous world over and highly sought after.
Okay.
So I hope that answers, both your questions.
Yeah. So competition in the sense, actually, I was, I wanted to understand more on the volume, the kind of total volume demanded. So, and how the share of these competitors are there. So how in India and as well as global markets, what is the total demand of in terms of metric ton
total
these colorants?
So the total demand for synthetic food colors is estimated at around 50,000 metric tons a year, out of which, Roha Dychem would contribute around 10,000 metric tons a year. Vidhi specialty, as you know, stands at around 8,000 metric tons per year once Dahej is running full stream. Nilicon would stand at close to 2,000 metric tons a year. Dystar would stand at around 3,000 to 3,500 metric tons a year, and the rest of it. But of course, as I said earlier also, Dystar is not performing very well in losing market share, so their volumes will come down. And the rest of the market share lies with Sensient.
Okay. Still, I think because on the 50,000 metric ton market, so
Correct.
I can count this, the 10,000 if Roha, 8,000 roughly Vidhi. And Nilicon, how much you said?
Nilicon is small. It's around 2,000 metric tons. Yeah.
2,000. So still, this is just, 18, 20, 23,000 tons. So I think this four player constitute only half of this market.
So Dystar you should put at around 3,500 metric tons. And there is also another company called the Daiwa of Japan, who are also manufacturing synthetic food colors, but their market share is restricted to the Japanese territory itself, and they make around 2,000 tons a year as well. Yeah. Yeah.
Okay. Okay, fine. And this is the 8,000 we are saying that post the Dahej expansion. We are not including that Roha expansion right now.
No, this is only the existing facility at Roha and with the new expansion which we have thrown open in December in Dahej.
Okay.
Yeah.
Yeah. And third, the comment, I wanted your commentary on the margin, how the margin looks like in next couple of years.
So see, like you have seen, the margins have already seen a vast improvement of close to 500 basis points itself from year 2023 to 24. And as Dahej comes, Dahej goes full stream. And how Mr. Mihir also informed that, we are also now introducing certain high value, high margin products. With the full introduction of all of that and by improving our product mix, which we are constantly in the exercise of doing, our margin should, we would not be surprised if it would add another 500, 600 basis points in the next year or, so yeah.
Okay, so scope of significant expansion is still there. Despite this, we have already improved our EBITDA margin. Yeah, and if I can add one more, that on the Dahej facility, the expansion, what is the peak revenue potential of Dahej? And if the Roha comes into picture, then what would be the peak revenue from Roha also? And timeline also, if you could get for a Roha facility.
So the peak revenue potential from Dahej would be roughly 250 to 300 crores once the facility goes full steam. And I believe you're talking about the next expansion for Roha.
Yes.
Right now we would not like to comment on our third expansion in Roha because currently, it is under statutory approvals, etc.
Mm-hmm.
And, once we get a slightly more clearer opinion on when we would, start production out there and when we would get the approvals, in fact, which is when we would like to release some forward-looking statements on that expansion in Roha.
Okay, but this is environment clearance is pending. That is where the current status is.
Yes, the environmental approval is pending, yes.
Okay. Thank you. That's all from my side. All the best. Thank you.
My pleasure. Thank you.
Thank you. The next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Hi, sir. Congratulations for a great set of numbers. My question is, if you can spell out some basic data points on FY'24, what was your manufacturing segment volume growth? And what was the utilization of the existing plant of 3,900 tons? And what was the volume contribution from the Dahej SEZ plant for 3 months, which was operating? Would be great.
See, the contribution that came out of Dahej for the first 3 months, which is the last quarter for FY'24, was rather small. It stood at around 220-30 metric tons coming out of the Dahej facility. Because even though we threw it open in December, we had to slowly and steadily ramp up production in Dahej, and we didn't want to take things very fast, So, however, in the next quarter, we've seen, in the April, May, June quarter, we have seen much better, contribution from the Dahej facility, and it will only continue to grow. As far as manufacturing and trading, I believe you are looking at numbers, or you want, figures?
Manufacturing volumes, if you can spell out as a total volumes, what was the manufacturing volumes in FY'24, or maybe a YOY growth would be helpful.
I will speak in terms of volumes, because that will give you a slightly better idea. For 2023, the total manufacturing volume stood at 3,300 metric tons, which for 2024 stood at 3,800 metric tons, so registered a growth of 500 metric tons out there. And it had some contribution from Dahej also, like I told you, around 220 to 250 metric tons.
Perfect. So 3,800 metric tons for FY'24 includes 220 tons of Dahej SEZ, correct?
Yeah, that's right. Yeah.
Perfect. Now coming to the gross margins from the manufacturing side. So you did allude about 500 basis point improvement that we saw in FY'24. That is also a function of your trading revenue going down, right? So it has to naturally come up as and when we take out trading revenue. So if I have to do a like-to-like comparison on the manufacturing side, your margins have broadly remained flat as far as our calculation goes. So how should we look ahead? Where your gross margins are at around, manufacturing gross margins are at around 44%, 45%. How should we look ahead? What should be the margins that we should think of in terms of gross margins?
See, I'll tell you one thing. The trading revenue for the year 2022-23 stood at 123 crores. As against the trading revenue for 2023-24 stood at only 31 crores. And, now that you are seeing an increase of 500 basis points as far as EBITDA is concerned, which means whatever, additional EBITDA that we've been able to bring out has been all contributed to the increase in the manufacturing, revenue, which we have seen compared to 2023, 22-23. So now that we continue to, substitute trading with the manufacturing revenue and with Dahej coming on full steam, it gives us economies of scale, economies of manufacturing, reduces our fixed costs, overheads, distribution costs, marketing costs, etc. And we will be able to improve our product mix to an extent where we have not reached so far because of the production constraints which we faced in Roha. All of this together, along with the new products which we have spoken about, all of this will help our, operating margins improve further by 500 to 600 basis points, So it has multiple factors favoring, the way we work and the way it allows, now the new facility allows us to work, is what will bring about the change in the operating profit, And
so I got your comment. Yeah, I got it. So again, we have been tracking the company for long now. What was FY'24 manufacturing EBITDA margins? If you can spell out that, it will answer many of the other questions.
So I would say you should, the entire EBITDA margins for FY'23-24 were almost coming out of the manufacturing business.
The total EBITDA of FY'24 was contributed by manufacturing. So the zero EBITDA contribution from trading. Is that correct?
A very small EBITDA came out of trading, Not too much. Entire EBITDA was contributed to the manufacturing.
Perfect. Now, the second
what happened was, mainly 23-24, we were concentrating on clearing out the, trading stock, which would allow us to almost exit out of it completely.
Yeah, got it, sir. Given the prices were on the downward trend, we thought that we would have done some EBITDA loss on that side. So this is what the reason why I was asking on the manufacturing EBITDA margins. No problem.
Okay.
My second question is on the combination of macro-micro, where 85% of our revenues do come from the exports, which are into the regions where your global markets industry growth is expected to be somewhere around 5%, right? And there is no significant demand-supply change which is happening. So what gives us the confidence, to completely ramp up the Dahej SEZ plant within a year's time? If the scenario is such that where there is any global capacity shutdown, then it may be easy. What gives us this confidence to give this kind of targets where almost double the size you would utilize it in a year?
Correct.
So, Mr. Mitesh, Mitesh, can I please take this question if you don't mind?
Please go ahead.
Right. Okay. So this is Mihir here. I will answer this question. Now, with regards to your question that how we are so confident that we will be able to successfully ramp up, I would like to say that, even currently, we have an order book which allows us, if we can make as per the requirement already that we have the existing order book, we can achieve full, we can ship out all the production that we will be able to get even after the Dahej facility is maxed out. Okay. So it is not a question of whether we have the demand or not, but the question is how soon, we can overcome all the bottlenecks, etc. that we are having in the new facility. Also, we are making certain changes for which we needed this time, and as we scale up, we already have the kind of demand. We also have certain additional approvals from new customers, some very large accounts that are at very advanced stages, and these are some very sizable accounts. So, which we are confident of wrapping up over the next few months. So the order pipeline is we are 100% confident is not an issue, which is otherwise we would have never planned a third expansion in Roha after the Dahej. If we don't see or if we don't have such kind of confidence about our ability to market the capacities that we are investing into, right?
Very clear, Mihir bhai. Thanks a lot for answering that question. Just a last question on my side for you. Domestic sales are yet very small size versus the available market, the demand of around 3,500 tons. Any specific local strategy that we have in place? Would it be fair to assume that incremental volumes would also go towards servicing the domestic market?
Good question. What we had to unfortunately do so far was to neglect the local market, because as far as the export market is concerned, you ship out in container loads. So each order is, beginning from $70,000-$80,000 can go up to $400,000 single PO, Whereas when you are servicing domestic customers, it could be anything from a rupee 20,000 order to a 25 lakh order or 50 lakh rupee order. But the average ticket size of each order will be much smaller in the domestic market. You will need a lot of more marketing bandwidth. So and the kind of demand that we have been experiencing from the export markets, we were not being able to do justice to our existing customers also. So which is why we were not very keen on approaching certain key accounts that we already have on our radar in the domestic market also, which now we can take which we can now take into our fold once we are further scaling up the production at Dahej. So as we get more quantities available for sale, we will be acquiring newer accounts from the domestic market. We have already built a very good marketing team for that also. So we are confident of increasing our domestic sales. You will see remarkable growth in the domestic sales over the next 12 months. Yes.
In fact, I would like to add to that the process has already begun.
Yes.
And for the financial year 22-23, where our domestic revenue from manufacturing stood at 8.18 crores, I'm happy to inform you that for the year 2023-24, that revenue has almost tripled to 22.59 crores. So that process that Mr. Mihir was talking about has already begun, and we will only improve upon these numbers with the coming years.
Perfect. And if I have to just squeeze in one more question. So given the large account order book that we have for the exports, given the domestic strategy that we have to fulfill our Dahej SEZ capacity, and the focus is clearly on a higher value items, right? Higher value SKUs, higher value molecules, high margin products. So would it be fair to assume there would be a slightly improvement in the average selling price that we have seen in FY'24 to FY'25, 26 and 27 as we progress ahead?
Absolutely. Absolutely. The average unit selling price per kilo has to improve as we bring in newer products and improve our portfolio mix here. It will.
And if I have to recalculate the guidance that you have given for 250 crores of Dahej SEZ by the capacity, roughly average selling price comes to around 10% higher than what you have already clocked in FY'24. Is that understanding broadly right?
According to our estimates, the average selling price per kilo should improve by more than 10%.
Okay. And you cater to a very broader set of industry, which is cosmetic, from cosmetics to food and beverages to pharma and pet foods. So which can be the segment where you would see a very non-linear demand jump coming up, or maybe your customers or in the segments where you are not there, where you can see a very non-linear growth coming up in those segments? And if possible to give us a broader contribution from each of the segments would be helpful.
See, I will tell you one thing. As such, the growth that is expected by the company would come from all major categories of end user industries, which we are catering to currently, which is beverages or, food or feed or pet foods or, other such industries. But where we do expect some sort of non-linear growth that the company is expecting would come from the personal care industry, the healthcare industry, the beauty products industry, cosmetic industry, pharmaceutical industries, leak detectors, industry, inks, etc. This is where we are expecting the company to achieve a non-linear growth in the quarters and years to come here.
No problem. Thank you.
Thank you, sir. Participants who wishes to ask questions may press star and one. The next question is from the line of Gokul Maheshwari from Avrika Capital Advisors LLP. Please go ahead.
Yeah, thank you for my question. So just one, on the capex for the Roha, this is a brownfield expansion?
So, the expansion which would happen in Roha would also be on a fresh piece of land, hence making it a greenfield expansion only.
Okay. So I understand that it is subject to approvals from the environmental listing, but in terms of the challenges which we face in Dahej with respect to some delays in commissioning the expansion, what learnings can you really implement over here where the expansion is just happening just once the approvals are in place and assuming demand is in place, the commissioning should happen? Or do you envisage some challenges apart from environmental control approvals?
No, there are no other challenges which are envisaged as far as the second expansion is Roha is concerned. And also, need I remind you that as far as the Dahej expansion is concerned, the whole world faced an unprecedented period of COVID-19, during which, nobody knew what the next month or the next quarter would bring as far as restrictions on construction, availability of workers, availability of steel, cement, etc. is concerned, and how their prices would react when the supplies would come in. So that was a period, which each and every company should be excused of as far as any sort of delay in commissioning a project or anything is concerned. However, our team has done an excellent job by limiting the, damage that the delay could have done by working through that period very judiciously. And we've done some Herculean efforts still to minimize the effect or the delay, However, no such, we don't expect any such delays to happen as far as the second Roha expansion is concerned.
Great. And your average realizations have been around $7-8 on your
Correct.
manufacturing business. I'm not asking for year 1 or 2, but more directionally over a 3 to 5 year perspective as you move up the chain, addressing to more value-add products. How do you see the realizations really broadly settle out?
The realizations per kilo would jump above $10 per kilo comfortably.
Okay.
Over 3 to 5 years period,
Right. Great. Thank you so much and all the best.
My pleasure.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for this opportunity.
Namaskar.
So firstly, a small point for this financial year, our installed capacity is up from 350 to 675. And the benefit of the expanded capacity हमने fourth quarter पे ही experience की है.
No, see, like I explained a little earlier on, the Dahej facility is expected to contribute 250 tons a month from the third quarter of FY'24-25. That is the quarter starting October 24, So in financial year 24-25, we have still not seen Dahej in full flow. However, from the third quarter onwards, it is expected to contribute 250 metric tons per month. So our, capacity in use is 325 tons at Roha and 250 tons from Dahej for October 24 onwards.
Last point, sir, come again, sir.
So our expected capacity utilization would be 325 metric tons from the Roha facility and 250 metric tons from the Dahej facility, October 24 onwards.
Okay.
Totaling to 575 metric tons per month.
Okay. This is on the installed capacity of 675.
That's right, yeah.
Okay. And then, sir, when we speak about the capacity reaching 1,000, so when will that balance 325 will kick in which quarter?
For which the environmental, for which the permission from the environmental authorities is awaited in our greenfield expansion in Roha. Once we have that, only we can confirm when the additional capacity would come online.
Okay, because sir, in your presentation, slide number 12, you speak about our capacity being at 1,000 for 24-25 expected, yeah.
Correct. But the point is, we are awaiting environmental clearance as far as our second facility in Roha is concerned.
So on
we have a lot of infrastructure out there which is ready. as far as our other facility in Roha is concerned, a lot of infrastructure, building, etc., are present out there. So once we get the environmental clearance, it would not take us too long to, retrofit machinery, etc., and start production out there.
Sir, on an absolute basis, what was our tonnage for the fourth quarter then? Taking into account the expanded capacity ramping up also, what was the tonnage for the fourth quarter?
You mean March 24, you're talking about last quarter,
yes,
March 24?
Yes.
The total tonnage was 1,300 metric tons.
Okay. Okay, then 1,300 metric tons was for the quarter. That means
For
around
the quarter.
Yeah.
For the quarter ended March 24, yeah.
Okay, that means around 435, 440 was the monthly average.
That's correct.
Okay, so taking into account the higher utilization, this is going to be the trend, or we will be experiencing this to go up on every quarter basis, and then from the third quarter, the 550 number will come into play.
So as far as the first quarter of the financial year is concerned, you will see some rise, of course. You will see some rise in the second quarter also. And from the third quarter onwards, we've already given you the guidance of 250 tons coming out of the age.
Right. And to reach the optimum level of 675, will at the exit of the current financial year, we will be running, or for us, our business, we run at 80-85 only?
Sure. So, in another 2 quarters or so, you will see the Dahej facility running at full steam.
This is post the third quarter, sir?
That's right.
Oh, okay, sir. And sir, I missed your point about the EBITDA margin expansion. Definitely our margins, like on a year-on-year basis on the total revenue has gone up by 400 basis points. We are likely to add another 400 for this year. I missed your comment there, sir.
Not necessarily for this year, but we are likely to add another 400 to 500 basis points once we have substantial contribution coming out of the Dahej and once, we have some contribution coming from the new product line which we spoke about.
Okay. And this product line, sir, can you give a differentiation? What are we trying to explain?
I have already pointed out the end user industries to you.
Right.
And as of now, we would not like to further indulge more information on or detailing on these products, as it is better for our investors and the company.
See why we are refraining from doing this is because these are all products where they have been developed from grounds up by our own R&D team. All the processes, the entire technical know-how is proprietary, So, yeah.
That's so as a percentage of sales, what is our R&D expenses?
Mr. Mitesh, you can please answer this.
Our R&D expense would come to around 4 to 5% of our sales. And, I would like to point it out to you that we do not belong to a pharmaceutical sector or something like that. So while, we have a well-defined R&D facility and a lot of things going on, it doesn't necessarily always have to have a huge burden on the company's expenses.
Okay, but for FY'24, we have, ma'am, I'll just conclude here. For FY'24, we have spent 4% of our revenue as R&D expenses.
Yeah.
That is 12 crore rupees.
Yeah, or a little less also, I might add.
Little less also, sir. Sir, मैं फिर से क्यों join करता हूँ. Thank you.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya. Please go ahead.
Sir, can you hear me?
Yes, I can. Go ahead, please.
Sir, I wanted to just ask about the working capital cycle. So currently we are working at almost like 120 days, if I'm right. So do we expect the working capital cycle to remain at the current levels? And also, secondly, on the CapEx side, what incremental CapEx would be required, especially on the Roha side, for the facility to be fully commissioned once the environmental clearances are there from here on? Yeah, these are my primary questions here.
Right. So, as far as the working capital cycle is concerned, I would like to inform you. I'd like to give you two figures first. The total bank limit utilization as on 31st March 2023 stood at 50 crores 50 lakhs, which has gone down drastically to 19 crores 43 lakhs as on March 2024. Now, the point is that as the business continues to plow back profits and as it continues to generate positive cash flow quarter after quarter, of course, the bank limit utilization and working capital cycle has to come down, which it is showing from our figures. With regards to your second question about the Roha expansion is concerned, we expect around 50 crores outflow, 40 to 50 crores outflow, and which will all be done through internal accruals because we are a cash surplus company and have no problems in, on this scale. Yeah.
Okay. One last thing I wanted to check was, if I'm right, somewhere when we were operating at again around the year FY'20 or before, our working capital days used to be almost like 200 days, that kind of level. What has structurally changed to actually bring down those working capital days?
The cash flow that we are generating quarter after quarter, which we are, of course, employing in business, is the reason why our working capital requirements have come down. I would also like to point out to you our current ratio, which in the year 2021-22 stood at 2.32, which is now improved to 4.80. So as against a current liability base of 39 crores, we have a current asset base of 187 crores, which shows the strong financial position which the company is maintaining at all points in time and improving upon it, as quarters and years go by. Rather, the entire expansion also, wherein we put in 70 crores, was totally funded by internal accruals.
No, sir. What I was referring to was, previously we used to have issues like having to buy full container load worth of raw materials for us to actually properly function, and because of which our inventory requirements were pretty high. But now, when I look at your balance sheet, the inventory levels are much lower. So I was just wondering what has changed there.
So, see, what happens is there are 2 or 3 reasons why this has happened. Substitution of certain imported raw materials by domestically available raw materials, which comes in much smaller, lot sizes. Some of the naphthalene-based raw materials we have, started buying locally from India. So we do not have to import in a very major bulk quantity from outside, and we can have smaller transactions with local companies, and also the transit period from world over has increased to world over because of the whole Red Sea crisis, etc. So some substitution of raw materials from imported to local, especially naphthalene-based ones, and also our exit from the trading business means that some of the inventory which we are holding for our trading business is also all being liquidated. So it is a two-pronged, reason why our stocks have come down.
Okay, got it. Thank you so much.
My pleasure.
Thank you. You may press star and 1 to ask questions. The next question is from the line of Ranveer from Nuvama Wealth. Please go ahead.
Thanks for taking the question. Thanks for follow-up. The question related to that trading business, you commented the trading business has significantly reduced, and that business is because that was the stock which we were carrying and wanted to clear. So in FY'25, the trading business would be zero, or we still have some products there to sell?
See, we are estimating the trading business to be zero only as far as FY'24-25 is concerned. Yeah.
Okay. And the volume number what you gave, that included that trading business also?
No, the volumes I have spoken of have only been of manufacturing business, not of trading.
That was completely manufacturing.
That's it.
Okay. Fine. That clarity I wanted. Thank you.
Thank you.
Mr. Jain, I have unmuted you. Kindly proceed.
Thank you. So just wanted to understand what are the FY'25 volumes we are aiming? You have indicated from the second half of the year, but collectively for the year, what would be the volume compared to 3,800 metric ton last year?
The volume compared to last year would be the total volume would roughly stand around 4,600 to 4,800 metric tons for the entire year.
All right. And this will include the existing line of products, or we are going to see contribution from the higher value, higher margin products as you speak of the enhancement coming in?
Some contribution from the high value, high margin products will also be seen in this year.
Okay. So about that, what kind of enhancement we are aiming? You don't have to allude to the kind of players, but what kind of enhancement is this going to be compared to what we have been making in the last 4-5 years? I just want to understand the direction that we are going in as a result of the R&D, because all this process approval also in the past we have said takes 4 to 5 years. So just wanted to understand how our efforts are going to yield going forward.
So we've been working on these products for the last 3 to 4 years. All of them have already been developed on the lab in pilot scales. Most of the approvals are almost in place, or we are due to receive it any moment. And we have also started manufacturing and promoting these products to several countries worldwide where we have already started supplies, and it will only keep increasing. So we have been on it for quite a lot longer than, it's been close to 4 to 5 years that we've been working on these products.
And these new products that we have developed over the last 3-4 years, say after a couple of years, could it account for 10-15% of our volumes or much more than that?
We see it at around 15%. It can go higher also. But I would safely say around 15% of our total volume.
But in terms of the absolute, see, in terms of Mitesh, I am trying to say that in terms of tonnages it would be 15%, but in terms of revenue it will be much higher.
Yeah.
Maybe more than 30% also.
In terms of revenue contribution, yes, not in terms of tonnage, because these are low volume, high value, high margin products,
I understand. So, of course, that would be perhaps 20-25% of the revenue also. That is also possible, right?
Even higher, possibly even higher,
Yeah. Yes.
Okay, this is heartening. Also, about the order book that you were saying, it's quite encouraging that we have these approvals and the pipeline is strong. Is it possible to give us some color as to how this order book is placed? I mean, we already have executable visibility going into FY'26. Is that what you were indicating?
Absolutely.
Yes.
Absolutely.
At the full installed rated capacity, that's what you're saying?
Yes.
Okay. And lastly, these approvals that we have got, is it from new client additions on the international side? And I'm hoping some domestic ones as well, or is it only that we are increasing wallet share from existing clients? If you could give some color on what these key logos are going to be, whether it is pet care or pharma or F&B, however you can add value to this point.
See, we are pocketing several high-profile clients world over in territories where we might be present, but to those who we have not been supplying so far. So, it's not only the existing client base. We are taking in a lot of new large multinational corporations and other such clients. But a lot of this growth that is envisaged will be from the export side. Of course, we will, continue to grow our local market also, but most of the push we are seeing from the export side. Yeah.
Okay. And any further licenses, approvals, compliance requirements that we need for pushing our products in regulated markets or to top MNCs, or we already have it all and whatever CapEx is going to be just basic
We have
maintenance?
it all.
So let me elaborate on this for a moment.
Yeah.
See, we already have approval from US FDA, and in addition to this, we follow various quality systems like ISO 9001, 22000. We are GFSI compliant. So rest assured, we have approval from other various FDAs like the Korean, Iranian. So even the individual Thai FDA, So as far as the regulatory part is concerned, let me assure all of you all that Vidhi's hallmark is its quality and its readiness to be the first one in the industry to adopt newer quality standards. In fact, Vidhi was the first company in the whole of India, the first food color company to adopt ISO 9001 in the year 1998. So that has always been our endeavor,
Excellent. And my last question is on our innovation. I am seeing that even new companies are developing and launching products in medical inks or in use of heat transfer products or for use in semiconductors. So do we also have our products which will be applicable to these areas?
See, we have
tremendous growth opportunity.
We have our products which are like even the cosmetic industry, like we spoke about. It's a $60 billion industry globally and growing, So, and possibly the fastest growing industry in all developing markets, because as disposable incomes increase, women get more money to spend. The highest spend is on cosmetics, And as more and more women are going out, with all the social media and everything, so the use of cosmetics is blowing up. Like the growth is crazy, in those sectors. Personal healthcare and hygiene is something where there is explosive growth. More people eating out, working. They don't have time to cook at home. So all these are high growth sectors. In India, going ahead, we see a quantum jump in demand of our products.
That's on the cosmetic side. It perhaps appears that we have an outsized share which will only grow. But I was just asking of these new areas where small companies are launching products.
Semiconductors and all is not where you would use food grade colors or such kind of colors. So you are talking about two totally different. Now, how can you find use of our colors in the solar industry or the semiconductor industry?
Or medical inks or those kind of things, yeah.
So we are already, like Mr. Mitesh already elaborated, we are already developing products which are used in some specialty inks, So we can't give you the exact application, because then it creates, like we again told you that all of this is proprietary products. So we can't go much, very specifically we can't talk about these products, but we've given you a very clear and broad idea about where these products are used in, where they find application.
I appreciate the color you provided, and just a small suggestion is perhaps sometime this year or by the end of this year, if it's possible to give the contribution coming in across segments, whether it is cosmetics, F&B, pet care, so on and so forth, it would give us even more depth of understanding, if you can consider that.
We have noted this.
Thank you. Thank you.
Thank you. Ladies and gentlemen, this will be the last question for today, which is from the line of Surit Deora from Paladin Capital. Please go ahead.
I just wanted to clarify a couple of numbers. Firstly, I think you mentioned FY'24 tonnage was 3,800. Is that correct?
Yeah, that's right.
So if with that number, your approximate realization per kilo works out about 800 rupees. But I was also trying to reconcile this number with what you were saying for the new Dahej plant. And I think you mentioned 350 tons a month and a maximum realization of 300 crores. So that works out to a per kilo realization of about 700 rupees. So there seems to be a disconnect because the historical numbers are...
I'll tell you one thing. What happens is that some of the newer products which we have introduced and which we are also going to introduce will all be made in Roha. They will not be made in Dahej, which is why the per kilo contribution of products from Dahej may not be able to scale further. When you look at Roha, that is where the increase in per kilo revenue realization will come.
So I think it's fair to assume that the blended realization per kilo will start moving northwards of 800, let's say 1500, whatever it is. And I should not focus.
As far as realization per kilo is concerned, let's not take it in Roha and Dahej town. Let's keep it on a blended town.
Understood. And the second question I have is that I think there was a comment made that the tonnage expected for FY'25 is about 4,500 or 4,800 tons. Is that correct?
Yeah, around 4,500 to 800 is the expected tonnage. Yeah.
Are you guys being conservative because you're already at a run rate of 440 per month, if I'm not mistaken?
See, to some extent we are being conservative. This figure can only improve. This figure can only improve as Dahej continues to produce more and more quantity per month. So this is the bare minimum. You can take 4,800, 5,000 tons as a bare minimum what we are looking at as far as 24-25.
Yeah, I mean, you already had a 5,500 ton run rate. I would expect it to be even higher. As you mentioned, Q3 will be the inflection point.
No, we are not at a 5,500 ton run rate, my dear. We are at 300 to 320 tons in Roha. Plus, Dahej is expected to, contribute 250 tons per month only from the third quarter of the year. So the first 2 quarters, Dahej would not be contributing 250 tons. So only when that happens.
Okay. I think I'm sorry. Maybe I extrapolated from a comment made by a previous participant who said that they all did 1,200 tons roughly, so 1,300 tons roughly in Q4.
Yeah. See, that is, we did turn around close to 1,200, 1,300 tons for Q4. But which is why I'm saying, and there was a lot of, there was a lot of bought-out colors as well, which we will be substituting with our Dahej production. And, so in all, 5,000 is the minimum that we are looking at. Yeah.
5,000, 5,500, yes.
Yeah, 5,000, 5,500 is,
realistic figure.
Yeah, which we would like to outperform.
And by the end of next year, end of FY'25, you will be at the run rate of full utilization, which is close to 650 tons per month across all plants.
75 tons per month, yeah.
Okay. Yeah. Thank you so much.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Mihir Manik for closing comments. Over to you, sir.
Thank you. So thank you so much, everybody, for joining us. I hope we've been able to answer all your questions. In case you have any further questions or queries, you may please contact the Orient Capital team, who are our investment relation partners. Thank you so much for being a part of the Vidhi Specialty Food Ingredients Limited earnings call, and I wish you all well.
Thank you, members of the management. Ladies and gentlemen, on behalf of Vidhi Specialty Food Ingredients Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.